It is a brand new year. They said that 2020 was the year of vision, and I'm going to tell you right now that the IRS has the clearest vision of all. Right now, they're taking a look back at everything that you did last year, and they're getting those documents ready, or maybe they already have sent you those W-2s and the 1099s. It's tax filing time. Now, I am not a tax professional, so you'll want to talk to a CPA about your specific situation, but I'm here to give you some pointers as to what to look out for if you are a trustee of a special needs trust and you are wondering whether or not you need to file a tax return on it. Hi, I'm Elizabeth Larson of Special Needs Advanced Planning, and for all the best information on special needs planning, make sure that you hit that subscribe button and the notification bell to make sure that you're alerted every time that I post new videos. All right, so here's the big question. Does the trustee of a special needs trust have to file a tax return on that trust? But that is the big question. But first we need to ask ourselves, is it a first party trust that we're talking about, or a grantor trust, or is it a third party trust that we're talking about? All right, so first things first, let's talk about the first party trust. Now, we know from previous videos that a first party special needs trust is a special needs trust that is funded with the assets of the beneficiary of that trust, who is most likely requiring those government benefits that are means tested that I've talked about in previous videos as well. So since the trust is funded with the beneficiary's own assets, they would be reporting that on their own income tax return. The trust itself would have no tax filing. Now, if the trust generated any income, the beneficiary would treat it as if they had received that income, whether the income had been dispersed from the trust or not. Now, normally trusts are taxed at incredibly high rates, so the fact that any income generated in this trust would be taxed at the beneficiary's tax rates is a big positive. Okay, so now let's talk about the third-party trust. We know that the third-party special needs trust is a trust that is funded using anybody other than the beneficiary's assets. So a lot of times it's either grandparents or parents that are funding the trust with their assets. And now, since the trust is not ever going to be holding any of the beneficiary's assets, they never were their assets, they never will be their assets, the trust itself has to do its own tax filing for any income that is generated within that trust. So it's also important to know that any income that is distributed to the beneficiary of that trust is going to generate what's called a K-1 for that beneficiary, and they're going to have to pay tax on whatever income they have received out of the trust. Now, what does count as income and what doesn't count as income can get really dicey, so it's really important that you do speak to a tax professional who knows exactly how the tax filing for trusts actually works. So something to be aware of is that every once in a while the IRS will see that income has been dispersed to the beneficiary, and then they'll say, oh, this beneficiary has too much money to qualify for the benefits that they need. So it's important to keep good documents that that money came from the special needs trust and what that money was spent on. That way you have clear evidence of that the money came from the special needs trust and was used for that qualifying disability expense. I hope that you found this information to be helpful. And while yes, there are some general basics when it comes to special needs planning, you need to make sure that you're speaking to somebody who has specialized knowledge in the area of special needs planning for your individualized approach. Now, if you liked what you heard today, make sure that you hit that subscribe button and that notification bell to make sure that you're alerted every time that I post new videos, and please share it with a friend. Also, if you liked what you heard today, make sure that you click on that link below to schedule your 30-minute complimentary consultation. Because remember, planning for your loved one's future today makes for a confident tomorrow.